October 9th, 19th, 2023. I've been mentioning we've had a bear channel over the past couple of days, and most bear channels last, two days or 150 bars. So this channel has been pretty overdone. We were about 150 bars into it when we got this potential final flag and essentially a reversal attempt here. We got a trend line break, and then you see we got a lower attempt or a lower low attempt at a major trend reversal on a 40, but the follow through wasn't there. Bulls got disappointed below 45 and started to exit. And that partially caused the sell off. Additionally, I've been mentioning over the past couple days, I thought we were going to get to this high, the October 5th high, and we actually got there today. And the price that it was at was exactly where this low was. So we touched down 72, and you can see there was a small bounce because traders who were trapped in are getting out, and that's what caused that bounce. Bar one, small doji bar. Not a good buy, not a good sell. Probably buyers below, probably sellers above. Again, at this point in the day, I would be more looking for rallies in general. Earlier in the day, after a couple days of a bear channel, bad follow through on 2 and 3 for the bears. What it could be forming here, so we have this spike, and we could get some sort of two-legged pullback. I thought this was potentially a two-legged pullback, and you could potentially get a rally above 9, but it ended up being a trap. Same way this was a trap yesterday. 3, doji bar. You have 2 doji bars in the first 4 bars. Probably better to just sit and not really do anything. Probably sellers above 4. If we get during 5, probably buyers below 5, probably sellers above 5. So we get a rally attempt on 6. Bulls buy below this. They might scalp out. I think it's maybe okay to buy above 6, but you need to do it with a really small position size and look to add on higher if you're going to do it. Reason being, sometimes on bar 7, you'll get a dramatic move. So if you're buying above 6, you're hoping that we're going to get some sort of dramatic move to the upside and you get swept into a strong bull trend. And it's pretty unlikely that that's going to happen. So, it's definitely okay to just wait for follow through instead of buying above 6, because if it's going to be a bull trend, you're going to get a lot bigger bars. But sorry. If it's going to be a bull trend, you're going to get a lot of chances to enter. And so I think it's better to just wait and not buy above 6. Bad follow through on 7, outside down. So traders who bought stuff got in and got stopped out immediately. 8, follow through for the bears, but it's 2 legs down after this spike. So bulls will be looking at this as, spike, 2 legs down, and then hoping we're going to get a second leg up. And 9 ends up being the second leg up. Me personally, and a lot of traders were hoping that 9 would have led to the opening swing and we would have gotten a big follow through. Instead, got an outside down bar on 10, and all those traders got trapped. Bad follow through on 11, which is really important because that's what makes 12 a lot less strong. Makes this look like one pullback 2, right? So 1 pullback 2. So that's what I'm seeing there, and that makes me think that 12 is a second leg trap. Additionally, you're super deep in a bear trend. When you're this deep in a bear trend, we're obviously on the bear channel line. So you're super deep in a bear trend, a broader bear channel. And you're right on the channel line, and you're getting one of the bigger bars, in the past, 50 plus bars. I think that 12 is more likely going to be a climactic bar rather than a bar that you should sell the close of and hope that we get a breakout. Bad follow through on 13. And I think 13 is interesting. I thought it was maybe, so, if you did sell the close of 12, you're going to want to get out really quickly. And bulls know that. And so when there's a bull close on 13, a lot of bears will exit above 13 who are short below 12. And you know that since it's probably a trading range, the bulls who bought below 11 are probably going to make money. So I thought it was a reasonable scalp to buy above 13, hoping we would race right up to the 11 low. I actually took it, and we got up here and started stalling. And that was, once we started to get up here, I just moved my stop to a little better than break even. So when it pulled back, I ended up getting quote unquote stopped out. But I, made a couple ticks, I think. But I think that buying above here is okay for a scalp to the 11 low on the premise that bulls who buy below this low should make money, and bears are probably going to cover their shorts above 13 since they're disappointed in the follow through that bar 12 got. So 14, disappointing follow through for the bulls. If you got 14 and then 15 starts to rally, a lot of those traders see that as a nice place to take profits. Additionally, even if 15 closes strong, a lot of traders argue it's 1 pullback 2. So again, a possible second leg trap. So a lot of traders exiting 15, not really as interested. 16 inside bar. At this point, we have 4 straight bull bars. So if you sold the close of 12, do you really want to see 4 straight bull closes? They're dojis, but they're still bull closes. So it continues to damage the bear case. Additionally, we're so deep in this trend, and this is a tight trading range. I think it's more likely to be a final flag. 17, bear close, but the moment we started to get back down to around the entry price, you can see bear sold a tick below 12, 43.2675. And so their entry price was 43.2650, and we went 2 ticks below that on 17, and it got bought up because those traders were buying back shorts around break even. So bad follow through 17, 18. 18 tests the 16 close after these 4 straight bull bars. Sometimes what traders will do is when you get 4 straight bars, it's kind of similar to what happened here, right? So if you bought above here, you start to get disappointed, and you're really disappointed by the time you get a 3rd close. Generally 2 closes against you is okay, but once you get 3, it really starts to, you have to start to worry and wonder if your premise is valid. And so you can see here, once we get 3 closes against the traders, they all just exited their longs at the market, and that's what caused this. Similarly, sometimes when you get, this, and then you get this much sideways trading, sometimes traders will just exit their shorts at the market, and it'll cause a bounce. But that didn't end up happening here. But I thought, situationally, that similar thing could happen here as happened here. Probably sellers above 18. This is all just a tight trading range. I wouldn't take any trades in here until 23. I think 23 is a reasonable buy. You're definitely in a bear trend, and you're low in a bear trend, so it's hard to want to buy. But do you think that this is a strong bear trend? Probably not. All of the overlap, all of the bull bars. We've only had really 1 or 2 good bear bars so far today. So this is more likely a trading range. And if it is a trading range, there's 2 things you got to remember. First being, nothing is quite as bad as it looks. Nothing is as good as it looks either. But, buying above something like 23 can be pretty iffy sometimes. But if this is a trading range, we're probably going to get pulled back to the open of the day. And you're probably buying low in the trading range. So 23 might be a bit higher probability than it would generally appear to be. Follow through on 24 and 25. Some traders bought above 23, at above 24 or 25. Some traders will wait for confirmation, 24, 25 to buy. Either way, you can see traders are buying. Pull back on 26 and a kind of climactic bar on 27. I still thought it was okay to be long because even after 27, it seemed more likely that we were going to go, we were going to go up. And I thought we were going to break to a new high of the day. And I actually thought, I've been thinking we're pretty overdone. We're still pretty overdone. I mean, you can see we're still obeying this channel line. We broke through the top of it, so there's an overshoot there, like a big, obvious big overshoot right here. But the market just ended up getting pulled back into the channel. So I'll be interested to see if we get a couple hours of sideways to up trading tomorrow. I think we will. I keep saying that because it keeps being true. But I think we're going to get a bounce tomorrow. I'd be interested to see what happens at the 60 low, maybe the 47 low. I was on bar 20, like 24, 25. But I just wanted to show one more interesting thing on the daily chart. So bears have good follow through, and you can see actually today, the bulls who bought below this low, you can see right here, we got big follow through for the bears. If you bought below this low, what do you think when you see this follow through? You're disappointed. That's not what you wanted to see buying below that low. You didn't want to see a big bear bar closing near its low. And so when today's tail pulled back to that low, all those traders sold out of their longs, and that's what caused the big sell-off. I've been mentioning, like I said, I thought we were going to get to this high, and we did reach it on the Emini. We might have to get a little lower, or I guess in general, because we haven't touched it yet on SPY. But ultimately, I think there's a low probability of a big bear follow-through day tomorrow. Maybe like 20, 25% chance that we just collapse tomorrow. More likely, what I think is going on, 1, 2, and maybe a 3rd leg down. So consecutive sell climaxes. This is a broad bear channel. You can see that. I don't know if this leg 1, leg 2 is even. Probably not. Yeah. But some sort of consecutive sell climaxes. Probably going to set up some sort of double bottom. And I think we're going to rally for a couple weeks. I don't think we're going to get all the way back up here, but we're probably going to rally maybe to this low or something. Yeah. Back to the 5 minute. So 27 climactic bar, follow through on 28. Traders start exiting longs, knowing that this is strong, but we're probably going to at least get a pullback, and they want to see how the pullback's going to look before buying again, hoping that we get a swing up. And you get bear bar 29, disappointing. Follow through for bears 30, disappointing for the bulls, and then you get this big outside bar on 31, huge surprise. What I started thinking when I saw 31, this was my thought process. We've been in a bear channel. And I thought that this could be the trend line break. It's not that great, but it could be the trend line break. And then if this bar had closed on its high, I thought it was possible we try to, have one of those 100, 150 point days and try to rally all the way up here. But obviously, I was disappointed in the close of 32. And a lot of bulls who were long were disappointed in the close, of 31. And a lot of bulls who were long were disappointed in the close of 31, and they're exiting at the market because a lot of traders are front running this, right? They see it start to rally and they're just buying the market, hoping it's going to close on its high, and they're going to get in at a really good price for what ends up being a great swing trade. And instead, what ends up happening is you get this big tail on the top. So those traders are disappointed and they're flattening their positions on the open of this bar. That's why 32 sells off. Additionally, you could be one pullback two. So this could be a second leg trap on 31. So when you get bad follow through on 32, a lot of those traders are disappointed and they're going to look to get out. This is big enough for a second leg. So that's what this was. But bad follow through on 32, probably more buyers than sellers below 32. You can see you got disappointing follow through on 33, and those traders bought back their shorts around break even, and that caused a rally on 34. As far as buying above 34, the problem is it's a third push up, or potential third leg up in what could be a trading range, right? Talked about one, pullback two, pullback three. So it could be a third leg up, but I thought it was an okay swing buy because there was I was pretty convinced we were going to rally today. I got to be a little better about being open to everything at all times, but there was a reasonable chance we were going to rally today. And when you get 34, it doesn't quite close on its high, but I think it's still good enough to buy, or you could buy the breakout. But then 35 is an important bar because if you're buying above 34, what's your premise? Your premise is this is a bull trend. And if this is a bull trend, you should be getting good follow through. And so any trader who bought, you can see they all ended up pretty much scalping out. I don't think they quite made 10 points. Yeah, they did not make 10 points, but they end up scalping out and you get a disappointing close below the breakout point. When you get this close below the breakout point, bulls are disappointed and they start exiting at the market thinking if we start to rally and get another bull bar, they'll just buy higher. But they want to see more price action first. And bulls are starting to exit their longs here because, again, this close is disappointing. They wanted it to close above the breakout point, which is the 31 high, and they wanted it to close on its high. And this bar sold off in the last minute or two. So traders disappointed all exit their longs in a panic, and that causes the big bear bar on 36. So this is mostly bulls selling at longs, I think. And you get good follow through on 37, but now you're back into this tight trading range. So you're at the bottom of a general trading range. And again, over the past few days, it's really just not been that good for, it's just less likely that we're gonna collapse here. Is what I was trying to say. Bad follow through 38. A lot of traders disappointed, exiting around break even during 39. Then we get a rally up on 40. Thought it could be, trend line break here. So I thought maybe we were going to rally here, but we got the trend line break and then reversal up on 40. Maybe this is the higher low major trend reversal or lower low major trend reversal. Maybe we're going to rally now. Good follow through on 41. The problem is the low of 35. You know that bulls who bought this low are disappointed in 36 and 37. And so they're going to be looking to get out around break even. So that's what a lot of this selling up here is. Doji follow through on 42, I think because the magnet's here. And if, I was long, I bought above 40 and I kind of just sat. I was hoping that we were going to continue to rally straight up and get to at least a new high before we pulled back. But when you get a disappointing bar like 45, you kind of just have to get out. And it's okay to get out below 45 because if you end up getting a bull, another bull bar, a big bull bar, then you can just buy again and you're in with a much better probability. But I think a lot of traders exit below 45. It's an inside bar, and this might have to get a second leg down before this gets a second leg up. So a lot of traders exit below 45. We get 46. You can also see that traders who bought the close of 44, disappointed 45, exiting around break even during 46. So they're contributing to the selling, causing 47. It's a high 2 on 48, but this is a pretty tight channel down. So I think that this is going to get another leg down and probably not that good to buy above 48. 49 outside down bar, potentially, a bull breakout below a bull flag, which is what we got to. Ironically enough, we got the breakout below that bull flag, and then we got the breakout below that bull flag. So we got a couple breakouts of bull flags. So okay to sell below 49, I think. You get good follow through, 50. Your premise is that we're going to break out of this bull flag and maybe get back down to the 38 high. And you can see that's pretty much exactly where we got on 59 before we tried to bounce here, but disappointed. Obviously, all the traders sold out. But anyways, follow through 51, 52, the bars are getting smaller. There's risk of a bounce for sure in this area. So I think a lot of traders are getting out of their shorts around the market. But there's no actual reason you have to exit in here. You don't have any strong bull bars closing near their highs. So you could have just held through the entire thing. But like I said, 53, bad follow through, bears buying back shorts. Some bears see a bull close, disappointed, will buy back shorts at the market, causing the rally on 54. But this is just some sort of wedge pullback on a smaller time frame. None of this is good trading. I think it was reasonable at this point to be looking for a good bull reversal bar and to buy, thinking we're at least getting here and we could get, somewhere up here. Additionally, actually over here, you can see the bears failed to break out of the 18 bar range, or they broke out, but the breakout was a failed breakout. So when you get a failed breakout of the 18 bar range and the market tries to reverse within 3 bars of that failure, a lot of times it leads to a swing in the other direction. So I was, in here, bulls trying to make a reversal or trying to get a reversal attempt and failing. And then big follow through for bears on 61, 62, 63. I actually sold the close of 62 and put a stop above it. And my logic was selling the close of 62. Occasionally you're going to get a collapse and you'll get a bar like 61 for 63, or, you'll get 63 and it'll just keep going. And if that's going to happen, it's not going to trade above 62, right? If there's going to be a collapse, it's just going to go. It's not going to bounce at all, trade above here, and then trade back down. That's very unlikely. So I thought it was reasonable to just sell that close and put a stop up here. You can see we got follow through 63, 64, 65. And when you do something like that, you can just trail your stop above every prior bar, because the moment there's a pullback, your premise kind of loses its validity. Especially because it's also a trading range, and in trading ranges, pullbacks can be violent like this. The market can very quickly go in the other direction. And so it's, you should have a tighter leash on a lot of your stop order trades in trading ranges when you start getting into, sell zones. Like if you bought here, now you're up here, you're in a sell zone, just get out below 45. And then we got, essentially trading range into the close. This whole thing is kind of an expanding triangle. The whole thing is essentially an expanding triangle day. And expanding triangles usually have, I believe, 5, 7, or 9 points. So 1, 2, 3, 4, 5, 6, and we'll see if we get a 7th one tomorrow. But expanding triangles are often final flags, and it would make sense that after a couple days of a bear channel, we're getting a final flag, and then might get some sort of reversal. Daily chart. I kind of already talked about that. Today is Thursday, so tomorrow's Friday. I think on the weekly chart, this just looks like 3 pushes down. So be interested to see if we end up finding buyers next week. But for now, strong bear bar closing near its low. Bears want it to close near or at its low, and bulls want to make it as bullish of a close as possible, but it's not going to get all the way up here. That would be, 100 plus points. So the next spot traders would look for is the midpoint, which is somewhere in here. That's a rough guess, but that's more like 50 points away, which is more possible. Yep, that's the day.